What is up? It is Big Char Trades back with another video, and in this video I am going to be teaching you how to find an accurate draw on liquidity. This is one of my most commonly asked questions because I feel like a lot of people just don't know how to find a draw on liquidity, and they see all my trade recaps, they see me post on TikTok and Instagram and Twitter, and they ask me how to find a draw on liquidity. How do I find a draw on liquidity? So, I figured that what better way to teach you than to actually teach you with the charts. So that is exactly what I'm going to do today. I have two things that I have to apologize for. The first thing is that I haven't posted a YouTube video in like 9 days or 10 days or 11 days, really long time. I stopped posting the trade recaps because I didn't really like how they were perceived. It started becoming expected of me to post a trade recap, and I really didn't like that. And then the second thing is, today, I'm in the Discord, I didn't show up this morning. I am sick as fuck. Like, I am deathly sick. I feel horrible. I don't know if you could hear it in my voice. So I was planning on just taking the day off, but I was like, okay, you know what? I'm sick as fuck. I'm not really going to do anything today. I'm not going to work out. So I'm just going to make a YouTube video, and I'm going to teach you guys how to find an accurate draw on liquidity, because that is probably one of the most asked questions that I get. So, yeah. Let's get into it. There are a few things that you need to understand when it comes to finding an accurate draw on liquidity. You have to understand how session highs and lows work. You have to understand how data highs and lows work. And you have to understand SMT and premium and discount. So these are all things that I use. Let me write that down so you have all of them. One is session highs and lows. Two is data highs and lows. 3 is SMT, and then 4 is premium discount. Right? These are all things that are extremely important, and you need to understand all of them in order to understand anything. Right? So let me just break down each thing, and then I'll show you on the charts. So basically, session highs and lows, right? Asia high, Asia low, right? London high, London low, right? So for example, that would look something like that. And then let's say this is price, right? Asia high is like this, like we come in, makes a high, then makes a low, right? And then we trade up. London session opens, London makes a high, and then London makes a low, right? So this is how this works. I actually drew that horribly. Let me redraw that because that's a little confusing. All right, obviously the chart comes before the lines. Okay, so let's say that this is Asia high right here, right? That's Asia high. This is Asia low, right? And then this is London high. And this is, let's just say like this is London low, right? Okay, so the way that session highs and lows work is that, and it's the same with data highs and lows, right? Is that if price sweeps one high, you target the other high. So for example, right here, okay, sorry guys, bear with me because I'm sick, so this is kind of difficult. Okay, so let's just pretend that this is Asia high and this is Asia low, right? If price sweeps Asia low, then our draw on liquidity could be Asia high, right? Solid, right? Especially if there's like SMT there, right? If price sweeps Asia high, there's maybe some SMT, our draw on liquidity would be Asia low. Same with every single session. So this is valid for Asia, this is valid for London, this is valid for New York AM, New York PM, and data highs and lows as well, right? So usually data highs and lows, okay, data highs and lows are accurate for every single red folder news event. So typically the ones that we use are 8:30, is an 8:30 news event, right? So typically 8:30 news, right, on the 5-minute time frame. Price makes a low, price makes a high, and then closes, right? That's a 5-minute candle. This is an 8:30 a.m. candle, okay? This is data low, and then this is data high, right? Price goes ahead and does this, right? Chops, 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 and then we sweep data high. Then our draw on liquidity would be data low, right? Same thing, vice versa, right? If price chops here, sweeps data low, then our draw on liquidity would be data high, right? You see how it's the same as sessions, right? We sweep buy side liquidity, our draw is sell side. We sweep sell side, our draw is buy side, right? Now there are two extraneous circumstances to this, okay? Not to data highs and lows, but just to session highs and lows in general, okay? So if we see displacement through, and I have to show you this on the chart, if we see displacement through a session high or low or a data high or low, then the opposing liquidity is, we can leave it alone. Okay, so the best example is right here, okay, today. You see how we displace through Asia lows, right? You see how price literally just trades to the downside. Right, we didn't consolidate at data lows. We didn't do anything. We just traded strictly through the downside. When this happens, in my mind, when I see that, I anticipate for these Asia highs to be left alone, right? And as you can see, price traded to the downside and we never came back up and swept Asia highs. Now you can see the same exact thing happened with London, right? We displaced through London lows. When I say displaced, you see that aggressive move to the downside. We displaced through London lows and London highs were left alone. Okay, now it's obviously the same thing vice versa. If we displace through Asia highs, then we could anticipate Asia lows to be left alone. If we displace through London highs, we could anticipate for London lows to be left behind. Okay, that is something that is very important and not many people talk about. So it's a little secret there for you. There's displacement. Opposing liquidity is typically left alone. Okay. The third thing that we have to talk about when finding a draw on liquidity is SMT. Okay, so if I see that price comes in here and the NASDAQ, let's say the NASDAQ sweeps London lows, right? And ES comes in here and ES does not sweep London lows when we start trading to the upside, right? That is some bullish SMT, and that gives me even more conviction in London highs getting taken. So when I'm looking for a draw on liquidity, I'm looking at all these key levels and I'm looking for SMT because SMT will tell me where the market really wants to go. So that's basically how I use session highs and lows and data highs and lows to find my draw on liquidity. Now we can get into premium and discount and stuff like that. So typically my draw on liquidity is session highs and lows or data highs and lows, but sometimes, in a situation like yesterday, my draw on liquidity was all of these lows, right? And if you look at my TikTok or my Instagram or my Twitter, you'll see that I posted a screenshot. This was all my draw on liquidity. Why was this my draw on liquidity? Well, these are all key wicks. These are wicks that just stand out. They are huge wicks, either from, data highs or lows that get left behind, or just in general. These are all huge wicks. There are a lot of orders inside of these wicks because they just look abnormal. They're just abnormal wicks. When I say market reviews are important, they're important because you need to understand and learn how to identify unusual price action, right? Like when you see a wick this big, this just looks like it's going to get taken at some point, right? To me, that just looks like that. I can't explain why, I can't explain how, but this just looks like a wick that's going to get taken. This also looks like a wick that's going to get taken. If I had to point out one draw on liquidity today, it would probably be this bottom wick right here. But why is price trading to the upside now? Well, we have to come back to equilibrium because as you can see, if we take this range, right, we're probably going to come back to equilibrium before we dump, right? Price always must maintain equilibrium, right? This is discount, this is premium. We only short out of premium and long out of discount, okay? It's another topic that I'll get into later in this video. But great example of this wick thing that I'm talking about is yesterday. So if we take a look at yesterday's price action, okay? I was bearish going into yesterday. Why was I bearish? Well, let me go to the replay feature right here. Well, I was bearish because if we take a look at the 4-hour time frame, well, we inverse these bullish fair value gaps. We also have this big 4-hour bearish fair value gap right here that we had to retest equilibrium, right? So we see this range right here. Price made this high and then made this low, and as you can see, this move up is back to equilibrium. As you can see, this middle 50% line is equilibrium. Okay, price always returns to equilibrium before going lower. So that was my thesis going into the day, right? Take a look at the hourly time frame. If this thing ever loads, right? And we see a similar narrative here, right? This is the high, This is the low. Okay, price returned to equilibrium inside of this hourly bearish fair value gap. We also had some SMT right here. As you can see, this leg is the highest high. This leg is the highest high on the NASDAQ. This leg is the highest high on ES. And I'll show you the lower time frame SMT there in a second. And then on the 15-minute time frame, well, what do we have? Okay, well, coming into the market, we're obviously not just going to short, right? We're not just going to short because this is too big of a range to do anything with. We can't do anything with this range, okay? There's too much chop here. Price is already traded into this fair value gap. There's too much chop here. So what are we going to do? Well, we're going to zoom in a little bit, and we're going to take the 50% of the current range. So coming into the market, right, what do we see? If we take the 50% of the current range, right, this high to this low, okay, what do we see? The only fair value gap that I see in premium is this one right here, okay? I see that fair value gap right there. Obviously, it's just a bunch of chop here on ES, but I see that fair value gap that's sitting in premium, right? This is above the 50% line. So I want price, my narrative is for price to trade, take out this liquidity, and then take all of these lows, right? Going back to the wick thing, right? Look at this PM wick right here, right? That looks kind of funky. And then look at this Asia low wick right here. That also looks kind of funky. And then we also have these equal lows on London. So all of these lows look amazing to me, right? This looks like a perfect thesis. If we trade up into this gap that's in premium, you know, I will short and take, you know, all these lows. Okay. So market opens. Let's go to the 1 minute time frame. Okay. Market opens right there. We take the high and then we immediately trade to the downside and we end up taking all of these lows, right? And that is my draw on liquidity being executed in real time, right? You see that. If you don't believe me, you can go to my Twitter. You see I posted my draw on liquidity screenshot. Everyone in the Discord sees that this was correct, right? And yeah, so you guys can see how I'm combining all of these concepts to form my draw on liquidity. Not only to form my draw on liquidity, but also just to understand price. Like I'm not just sitting here and saying, oh, this wick looks good, I'm gonna target this wick. No, I'm using premium discount, I'm using session highs and lows, I'm using SMT, I'm using all of these things to form a narrative behind price, right? If then that, okay? That is how I find my draw on liquidity, right? If we take London high, if there's an SMT put in place, then London low looks really good, and I'll target that for my draw, okay? So, Charlie, how do you take these trades on the 30-second time frame? How do you take these trades using your draw on liquidity? How do you get these sniper entries and take these 1 to 7, 1 to 8 hour trades? Well, here's the thing, right? If you combine all of these concepts, right? If price is trading around London low, right? If we have SMT with ES, right? We have SMT. London high is all the way over here, right? We're trading in London low and we have a beautiful fair value gap that aligns with London low, right? And we're in discount, right? Longs to London highs look prime, right? Then I can drop down to the 30-second time frame, catch an inversion right here, maybe have like an 18-point stop, and my final TP could be London high. Now, what I'll do when I'm taking a trade like this is if there's some sort of unfilled gap or something, right, like a bearish gap, I will go break even when price trades up to the gap. I'll trail my stop if we pass that gap, right? I'm protecting my capital. That's the whole thing. So when you typically see me taking a trade with that huge of a range, right, where I'm catching like 100, 110, 115 points, I'm fine with getting stopped because I'm not putting any money on the table. I'm not risking any of my money after a certain point, because after a certain point, my stop is in profit or it's at break even. So this is essentially how I find my draw on liquidity. And I'm more than happy to make more videos like this. I hope this video was helpful. I'm just so sick of the misinformation online and everything in the trading space. That's why you guys haven't really been seeing me post as many TikToks or Instagram videos or whatever, or even on YouTube really, because I'm just so fed up with all the bullshit in the trading space. It's really getting old quickly. My number one priority is trading. So if being on social media is aggravating me, then I'm more than happy to take a little break. And that's a little bit of what I've done. And I know it's kind of annoying, maybe for some of you, especially the ones that really watch my content and enjoy what I have to say. And I'm obviously more than happy to make more and more videos about concepts like this going forward. And whatever you guys actually need, just let me know in the comments below and I'll make a video about it. But yeah, I mean, this concludes the draw and liquidity video. This is exactly how I find my draw and liquidity every single day. It really does come down to training your eye and just getting screen time. You really need the screen time. The only thing that's going to make you better at finding a proper draw and liquidity is screen time. I'd love to fucking lie to you and say that, you know, if you study these concepts, you know, you'll eventually be able to do it. But honestly, you're not going to be able to do it until you get the screen time in. When I say screen time, it doesn't mean just like experience with trading. It means like back testing, doing your market reviews, seeing what the market did, where you could have gotten an entry, training your eye. All of that stuff is exactly what you need to be doing. So, you know, yeah, that's the only way that you're going to really ever find a solid, consistent draw on liquidity that's relatively accurate. Like right now, what I see is I see price returning to equilibrium on the higher time frame. So like if we go to the hourly time frame, we could see, okay, did price ever return to equilibrium in this range? It did. So then we take this range right here, right there to right there, and price is currently, looks like, returning to equilibrium of the entire range at once, unless we already did that, which we have not yet, right? Price is going to come back up here, probably sweep into this fair value gap, and then trade lower from there. But yeah, guys, I mean, once you learn the skill of finding a draw on liquidity, you can apply it to any single time frame. That's how I swing my options. As you guys know, I've been doing that for a little bit. So I'm rambling right now, but if you have anything to ask me, or you have any questions, or you want me to make more videos like this, or you have any suggestions, whatever you have to say at all, let me know in the comments below. I am going to start making more videos like this. And with that being said, peace out. Have a great rest of your day. I have a whole like 35 video course with videos just like this inside of it. If you're interested in watching that, the link will be in the description below. With that being said, I hope you have a great rest of your day. Happy Thursday. Peace out, and have a good one.